Hi there, everyone. It's PJ here. I hope you're doing really well. It is Friday afternoon. It is the 24th of May, and I want to just give you a market update from the week and run through a couple of things with you, including some economic data, discuss the trade war that's going on, have another quick summation of what has happened since the Australian election, and talk briefly about gold, and then a couple of things that are going on in the business. So to get started on your screen, we continue to see issues and discussions around the trade wars and what's going on. So, there's a lot of articles at the moment on CNBC about the discussions that are happening between U.S. and China, and everybody's posturing. Trump is posturing, and they're trying to obviously negotiate, I guess, the best possible outcome for the U.S. This is continuing to cause angst and I dare say some volatility in the markets. The market doesn't like uncertainty. It's just that simple. And this trade war thing seems to be sort of ramping up as opposed to ramping down. And the Huawei stuff that's been going on in the last few days, and the commentary around Huawei is evidence of that. So all I'm doing is watching this. Obviously, it's of great interest to me, but I am watching this from a data perspective to see how it affects a number of economies, and I'll get to that in a second. But I want to just flip to a chart of the ASX All Ords and have a quick visual discussion about what happened after the election. So going into the election, we were trading somewhere around the 6,400 level. The market must have known something was up, because the market did have a pretty good day on that Friday. And then after the election result here on the 20th, we absolutely went on a tear. So we spiked up, and then over the last few days, we've just drifted higher up to around that 6,600 level. Now we have come off a little bit, and that's a result of the U.S. having some real issues. China getting smoked, Korea, Taiwan, and Singapore and Japan also getting really selling off. So there are continue to be some problems in our region, in the Asian economies, and specifically in China. But Australia is doing really well. And I want to just flip over quickly to a chart of some data that you might find interesting. Here we go. This is the chart I'm looking for. The Australian PMI numbers have come out today, or well, yesterday actually, and they were all very positive. So if you just look here where my cursor is, green, 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 all green. So that's a great sign. So the Australian Purchase Managers Index is up, and that is a very good sign for the health of our economy. Now, the interesting thing about all of this and post-election now, and I've talked about this on Monday, is I think we now have room to see the RBA cut interest rates, and I think they will do that next month. Obviously, we'll see. If they don't do it next month, I suspect it'll come in July. But the RBA needs to do some stimulation of our economy and get it growing again. We need to get housing out of the doldrums, and we just need to see GDP and real growth really start to kick up again. But the stock market seems to really have liked the election result, because it provides us certainty. So we don't have the things like the franking credits being taken away, this dumb idea around negative gearing, and other tax stuff that Labor wanted to do. None of that's going to happen. And the Liberals, who I think have been pretty good economic stewards, will obviously continue to drive their agenda. So the market really likes that. Now, interestingly, I just want to pause for a second here and just continue the discussion of the way I am now looking at formulating my investment decisions for you, my clients. You have probably heard me talk about quads, and I am using a research process now that is it's a proprietary research process, but it's one that I have I've collaborated with another group that provides a lot of research and data, and I'm using a lot of their methodology and models, but because I think it's very, very powerful. And it's data driven. And this is the beauty of a data driven approach, is that it removes emotion from investing, and it takes away a lot of these emotive decisions. Like, it feels like X or it feels like Y. Feelings, who cares? They're not should not be a consideration when you're investing. It should be mathematically driven, it should be numbers driven, and it should be data driven. And that is exactly the type of approach I've adopted. And so what you're going to see now, and the language I'm going to be using around investing, is going to be this. I'm going to be talking a lot about growth, so GDP, inflation, and policy, which is to say interest rates up or down. And those are macro tools. If you can get those three macro tools, those three macro things right, the direction of them right, it will then tell you the type of environment that you are headed into economically. So all of those things, obviously, they can each be up or down or sideways, and if that happens, it puts you in one of four possible scenarios or quads. And this approach then helps delineate the asset classes that you need to own, and then even the sub-asset classes. So if you own equities, I mean, equities is just a broad term. There are asset classes within equities. So you might own technology or industrials or consumer staples or utilities, that sort of thing. So all of this is to say that I am now using a very data-driven approach, and it is going to tell me how I should be positioning client money for the next quarter and even the next several quarters out. I think I talked about this in a previous update, but I'm going to keep repeating it until hopefully everybody understands it and everybody is, I guess, on board with it. But what you're going to see is more frequent movements in portfolios, and I'm going to really be now moving away from individual shareholdings. I'm going to start trimming all those positions down, and I'm going to be moving more into the ETF space. Furthermore, I'm going to be moving into international positions and international equities, so getting access to the United States stock markets and using the Australian stock markets as well for our Australian positions when we need to have Australian stocks on. So back to this chart real quick. What is really cool about all this is whilst the United States looks like it's headed into Quad 4, which is very bad, they're going to have to cut interest rates, the economy's slowing, earnings are slowing, they're likely to have an earnings recession. It's just bad in general for the U.S. Australia, on the other hand, is looking like it's headed into Quad 2, which is actually quite good. It means that GDP will be growing. Interest rate environment will still be pretty low. We'll have a little bit of an inflation, could have a little bit of an inflation problem, but in large part, we will be in a very strong position. So Quad 4 is bad, Quad 2 is good. Quads 1 and 2 are actually good. Quads 3 and 4 are actually kind of bad. So anyway, I'm not going to dwell on that too much more because it is a lot to take on. All you really need to know is that I will be talking about quads, and then over time you're going to obviously get a sense of what asset classes we need to own in each quad. So I'll just move on to a quick discussion of gold. So gold is interesting because gold actually likes both Quad 2 and Quad 4 because in both situations what you typically see is interest rates are dropping. So when interest rates are dropping, gold gets very useful and is picked up as an inflation hedge as well as a portfolio protection tool. And so gold as a key holding for us will continue to be there. But what I am going to need to do is, for a lot of portfolios, is reduce the exposure to technology, energy, and the food or consumer staples. And I wanted just to quickly show you a chart of the CRB index, which is which is a chart of basically that food or that commodities based stuff. And what you can see here is this chart is in a bearish formation and is moving down. So that's not a good thing for our commodity stuff. It also means that inflation is probably going to be decreasing over time. This is an interesting chart. I think I was mentioning the China Stock Exchange a minute ago getting slammed. Well, this is obvious evidence of that. I mean, it's just fallen off a cliff here of late, and it seems to be headed lower. And the problems of this are probably related to the trade war, but I think there are other issues going on there. Anyway, that's probably enough about that stuff. Let me just quickly close this off by letting you know that I have just recently set up my international brokerage offering, and I'm testing it right now. So I'm setting up some accounts. I'm setting up my own account and a few others. I just want to make sure we get the process right. But I'm very, very excited about this because what it's going to do is enable me to get you access to the international markets. So you're actually going to get the ability to really be a what's the word I'm looking for? A real savvy professional trader. Not that you're going to be doing that, but you're going to be getting the access to stuff that hedge funds and fund managers and things like that get access to. That's pretty cool. And with the overlay of the quad model and how I'm going to be positioned for that, I'm really quite excited about what that looks like for you going forward in terms of returns as well as protecting capital. So just stay tuned for some more messaging on that once my testing is complete, and I'll probably be done with that next week. I'm going to be talking about how it's all going to fit together with some of the other platforms that I'm moving to. My goal is to be able to give you one login to see all of your wealth, your personal wealth, your superannuation wealth, and anything else like your property wealth, stuff like that. So any assets that don't, for example, sit on an exchange that you may own. That's my goal, because I want you to be able to see in one login, this is what my financial situation is in terms of my wealth. So that's where I'm headed. I'm really excited about that. And I've also just rolled out an accounting service, so I'll have some more messaging on that probably next week or the week after. Look, I hope you have a good weekend, and I hope this wasn't too confusing. Don't worry if it was. Have no fear. I will continue to elaborate and explain all these things as time goes on and as we make these changes. So enjoy your weekend, and I'll talk with you soon.